Will housing prices go down in Canada? That's the question on everyone's mind. With the surge in home prices, Canada has taken a dramatic step, banning foreign buyers from purchasing residential properties for 2 years. This law is a response to concerns about underused housing and speculation. Of course, there are exceptions for immigrants and permanent residents who aren't citizens. The Canadian Real Estate Association, or CREA, has provided some interesting data. Home prices peaked in February of 2022, and have since fallen about 13%. However, the association has expressed concerns about this new law. They worry that it could impact Canada's reputation as a welcoming nation, and potentially prompt retaliation from the United States and Mexico, especially considering that Canadians are the largest foreign purchasers of American properties. As we navigate the sea of rising mortgage rates and changing laws, it's clear that the housing landscape in Canada is shifting. But what does this mean for the future of Canadian real estate? Let's delve deeper. Predictions for Canada's housing market have been quite varied. Indeed, some analysts anticipate a roller coaster ride for the housing sector in the upcoming years. A notable reference is a recent poll conducted by Reuters. According to this survey, house prices in Canada are expected to experience a sharp decline next year. How sharp, you ask? Well, the forecast suggests a significant drop of around 7.8%. Now, this is quite substantial as it would mark the largest dip since at least 2005. But wait, there's a twist. Despite this predicted decrease, houses may not necessarily become more affordable for the average buyer. The culprit? The Bank of Canada's plan to continue raising interest rates. Speaking of affordability, the poll also attempted to quantify the perceived expensiveness of Canadian house prices. On a scale of 1 to 10, with 10 being the most expensive, the average Canadian house price was rated an 8. The cities of Toronto and Vancouver even maxed out the scale with a perfect 10. So, what would it take for these prices to reach a fair value? According to economists, we're looking at a nearly 18% decrease, quite a drop, isn't it? But of course, these are just predictions. They are based on current data and trends, and as we all know, situations can change. Factors such as immigration rates, employment levels, and even global economic events can have significant impacts on the housing market. With such varying predictions and factors at play, it remains to be seen what the future holds for Canada's housing market. One thing's for sure though, the market's journey will be one to watch closely as it navigates through these interesting times. One of the key factors influencing housing prices is interest rates. The Bank of Canada, like many central banks around the globe, uses interest rates as a tool to control inflation and stabilize the economy. But how does this affect housing prices? Well, when interest rates rise, the cost of borrowing increases. This means higher mortgage rates for homebuyers, which can dampen demand for houses, and as a result, potentially lead to a decrease in housing prices. This is exactly what experts are predicting for the Canadian housing market in the year 2023. According to a Reuters poll, an aggressive interest rate hike is expected to cause a decline in average house prices by around 7.8%. However, the impact of interest rates on housing prices doesn't end there. As we move into 2024, the same poll suggests a modest recovery, with a projected increase of 0.5% in house prices. This shows that the housing market, while influenced by interest rates, is also affected by a myriad of other factors including economic growth, supply and demand dynamics, and government policy among others. Whether these predictions hold true will largely depend on the interplay of these complex factors in the coming months.